What is an efficient frontier? It is the set of well-diversified portfolios that have the highest possible expected rate of return for any given level of variance. The mean variance efficient frontier is the outcome of the work of the economist Harry Markowitz, who won the 1990 Nobel Prize in Economics for this contribution. Now, how is the efficient frontier constructed? Remember that as more and more individual investments are added to a portfolio, the investor's risk is reduced due to the principle of diversification. Now consider the graph that plots a bunch of individual stocks. If we combine two randomly chosen stocks with a correlation less than 1, we get a bowed curve between the two assets. Then, we choose several 2-asset portfolios, 3-asset portfolios, 4-asset portfolios, etc. Eventually, we get a big bowed curve that includes all available risky assets. So an opportunity set of investments is built when we take into account all of, or a combination of the assets. It represents the curve and all the points to its right. The curve itself is called the minimum variance frontier since all available portfolios to its right have higher variances for a given return. And the portfolios on the curve are called the minimum variance portfolios. The point to the far left, which is point K on the curve, is called the global minimum variance portfolio and is the efficient portfolio that has the lowest risk among all portfolios of risky assets. From that point upwards to the right, the curve is called the Markowitz efficient frontier. All portfolios on that line, such as portfolios A and B, have the highest return for a given level of risk or the lowest risk for a given level of expected return. Any portfolio below the curve is inefficient. Such as points C and D. It would be nice to have portfolio X which is above the efficient frontier. However, the combination of expected return and standard deviation at point X is not possible. So, the efficient frontier is the set of portfolios among all the possible portfolios of individual risky investments that offers the highest expected return for each level of risk. Find the full efficient frontier, CAL, and CML video on www.CogniVisio.com.